Hello traders and good morning and welcome to this video analysis looking at the US dollar. So traders, we've seen a weaker dollar starting to build because of the expectations that the Federal Reserve is going to be cutting interest rates. And if I show you the data that's causing markets to really bet on this expectation, it's because many of the leading indicators such as ISM manufacturing, which is a leading indicator that predicts GDP growth with an 85% certainty, has been slowing. So as you can see, ISM manufacturing has gone down from the higher 60s all the way down now to the low 50s, and above 50 indicates that the economy is growing, and a reading below 50 indicates that the economy is contracting and we're having deflation. Of course, central bank's job is to make sure there is inflation at 2% per year, and as we can see, ISM non-manufacturing, this is basically the manufacturing sector. And this is strongly correlated to GDP growth. So we're seeing manufacturing again go from 60 down to 55. So the economy is slowing, and markets are betting the Fed has to react because they have a mandate to make sure that inflation remains at 2% and there is strong employment. So with that being said, traders, we're looking at the Aussie dollar, US dollar. Now, this is interesting because, of course, the Australian Central Bank did lower interest rates this week, but they signaled no further rate hike cuts on the horizon, or they didn't signal that they're penciling in or waiting for the next policy meeting to lower rates further. And they have this new tax cut implementation being put forward by the Australian government. So what that can do, traders, is potentially, if the Fed does start cutting rates quite aggressively by 0.5 percentage point, push Aussie dollar, US dollar quite higher. Push it higher in the market quite rapidly. So just monitoring how this price action works. I'm putting an alarm just above the current price. But again, this week's jobs data by the US is going to be key, because employment, of course, drives economic growth in an economy. The more people who are working, the more people are spending, investing, and the economy grows. So if the employment data on Friday comes out really bad or much lower than forecast, I've been reading the analysts of many people this week, and they're saying that could be the trigger for the Fed to cut rates later this month. So we need to monitor the jobs data coming out on Friday, NFP jobs data, as we can see here. And if this comes out negative, this could really cause some dollar weakness in the market. So I'm monitoring potentially buying Aussie dollar, US dollar. I did close my New Zealand dollar, US dollar position, traders, and we did make our profit from this, which is great. But let's see what happens Friday. If the data is really bad, then potentially we can go back in and buy this. But I do have to be cautious because of the New Zealand Central Bank. Markets are kind of betting on more rate cuts because of the data that came out this week. So that's something just got to be a bit careful around. As we've seen with the USD CAD, we're already in a good trade. USD Swiss franc, traders, had been pushing to the downside, but again, stocks have been rallying higher with the US stock market making record highs, as we can see here, traders. And remember, stocks are pushing higher because of lower interest rate expectations, and if interest rates are going down in the US, this means credit is cheaper, people can borrow more at lower rates of interest, mortgage payments go down, business costs go down because they're paying less interest on their outstanding debt, and this drives this economic cycle into a position where corporates can earn more money, and this is why the stock market is rallying higher. And as a result, when stocks go higher, traders, we understand that the Swiss franc is in the lesser demand in the market. So potentially, this is why the Swiss francs be getting weaker against the dollar. But if the Fed does cut these rates, traders, then we could expect to see USD Swiss franc push to the downside. So that is something for us to watch out for after Friday's NFP jobs report, and the same for the US dollar against the Japanese yen. Let's see what happens after Friday's jobs report. For the euro, it's a bit difficult because this European Central Bank is now widely expected to cut interest rates, and the new president of the European Central Bank, who was the World Bank's leader, is seen as being a very dovish leader in terms of supporting lower rates, and that would mean that the interest rate differential between the US and the euro would remain in the dollar's favor. So I'm not really sure how high the euro could really go against the dollar, with rate cut expectations also being penciled in for the euro. Against the pound, traders, A lot of weak data for the UK actually came out recently this week, and it's caused the pound to really weaken across the markets. Although it was very tempting, I didn't want to trade the pound because of Brexit. And as we know, the pound's still undervalued by 20% since 2016. So even if markets are betting on rate cuts, the pound should be trading much higher than where it is now if there wasn't this Brexit uncertainty. So I'm just staying out of the pound and I'm not trading. So for the dollar as an overall analysis, traders, it's all to do with Friday's jobs data. What does that show? Markets are expected rate cuts. Is the Fed going to cut rates by half a percentage point or just a quarter? If it's just a quarter, not sure how much weakness we'll see in the dollar. If it's half a percentage point, strong weakness in the dollar. If they don't cut at all, which would be surprising, strength in the dollar. But that is our analysis for the dollar at the moment. We just have to monitor how things play out. Thank you for watching.